Good afternoon, everybody. Welcome. Welcome to this week. And boy, what a week it has been. Oh, seems like we live in a pretty crazy world nowadays. A lot of news, a lot of stuff happening over the week. What can I say? What can I say? But we're here. We're here. We got the weekend. Let's have some fun this afternoon. I did throw a poll up. I threw a poll up to see what you guys are expecting in this coming week. Are we getting a red week, another red week, a green week, flat week? Or do you just want to get that poll out of your way? Because I'll tell you, those polls are sometimes annoying, especially when you want to go in and get in a quick comment. So, yeah, guys, throw that up. We'll take a look. We'll watch it. We'll watch it through the show. We'll see how it goes. All of that fun stuff. Of course, oh boy, we had a pretty red day on Friday. So maybe you got some deals. I will tell you, I got a couple deals. I did a little bit of buying for the 0 to 100K on Friday. Got some pretty good deals on a few stocks. So I'm hoping that there aren't even better deals later in the month, but nonetheless, I'm still happy with the positions that I did pick up. So that is always a fun thing. Guys, just want to take a quick second to talk about the good old Blossom. So if you've not heard about Blossom, Blossom is that social media app that is designed by, run by, and for investors. So it is a neat little app. You can talk about stocks. You can, if you want to, you can hook up your portfolio to it. And then that way your people can sort of look and see what you're doing, give you some feedback, or you can brag. You can brag with it too if you're doing really, really well. When you do hook up your portfolio, it is relative only. They do not see the dollars and cents. You can see it yourself though when you're on that app, and you don't have to do it. You can just go over to Blossom and have some fun. I'm over there. Definitely, if you go over, hook up with me because I definitely want to see what you're posting and drop in my 2 cents on it for sure. So it's good. It's good. There is a link, by the way, down below if you are interested in trying out Blossom. Yeah, now, guys, I did change up this week a little bit. I wanted to really clean up the image. I felt it was pushing me too far over to the side. So I was like, I want the image a little bit more up in the corner, a little bit more streamlined. And I've been making beaver versions of a lot of different people. So I thought it was about time I made a version of me. So we got Candace, we got Beaver Candace up there in the corning. Well, it could be in the corny because it is a little corny, but we got Candace Beaver who will be our new opening. So the bear and the bull are gone for now. They'll still, of course, you'll still see them around. Don't worry. Don't worry if you're big fans of them. All right. But one of the reasons that I did this too is that it just makes it a little bit easier if I do want to share a screen. So a couple of clicks and I can do stuff like that. So anyway, let's check out and see what's going on here in chat. As usual, we got Jonathan in first, who is, am I late for a U.S. takeover? Yeah. I think Trump has beat you to the punch. I think Trump has beat you to the punch on that one, Jonathan. But I'm sure you can try if you want. All right. Bismarcky says, happy Sunday, everyone. We got Prairie in the house with a good afternoon, Candace and community. Happy Sunday. We have Lisa in here with a hi, everyone. Mohammed says, hi, everyone. Yes, crazy week for sure. Yeah, absolutely. And we're going to talk a little bit about the week, of course, as we dissect some of the news as we move along. Prairie says, love it, love it, love it. Candace Beaver. There we go. Yeah, I'll tell you, I probably spent an hour trying to get those glasses a little more rectangular. But that was pretty much the best of what I could get. Best of what I could get. I'll probably work more on it. Get it updated maybe a little bit better. Prairie says, picked up some CNR. Yeah, CNR was at a pretty good price. Some TELUS and some HYLD past week. Not bad. Not bad. Jackie says, Beaver Candace is amazing. Muggsy says, love the new look. Yeah, like I said, we're streamlining it down a little bit. We also, of course, up in the corner, guys, the bomb. That, of course, is referring to, well, the bomb. So if we get to, in January, if we get to 25 supers of any type, and I'll tell you what else I'm going to count as well. If you gift subs, we'll count them as well. But if we get to 25, I'm going to take a teaspoon of this on the air. It could be fun. It could be fun. Oh boy, maybe not for me, but it could be fun for you guys. So that's what that counter is at. We're already up at 5, so we'll just watch that trickle along as we move. Roku says, howdy all. I think she looks more like a red panda. Yeah, yeah, there is. Like I said, it wasn't perfect. It wasn't perfect. I'm going to clean up. I'll clean up our beaver. But yeah, you're right. Now that you've said it, I can't get the panda image out of my head. Oh no. Yeah, I'll have some fun. I'll clean that up. Next week it'll be a little better. It'll be a little better. So that's going to be fun. But we're here. Let's take a look at our first news story. All right. So we had, and this was huge. This had a massive impact on the week. That was, of course, the jobs report. So we had both for Canada and the US. We had jobs reports that dropped on Friday. Now, in Canada, unemployment, it came in at 6.7%. This is good. This is good, though. This is really good news. It was last month it was at 6.8, and they thought it was going to stick around at 6.8. So unemployment has come down a tiny bit. This is good news. Employment crushed it. We were forecasting 11K. We didn't get 12K. We didn't get 13K. We got, holy banana bread, 90.9K new jobs. That's fantastic. Now, last month, when I say last month, guys, this report was for December. So last month is basically November. So in November, we had 50.5K. You do have to keep one thing in mind. December, of course, being the holidays, and some people do hire extra help for that. So that may help explain some of this, but only a little bit. We absolutely dominated the job market in December. So full-time employment, we were forecasting 10K. We went up 57.5K. And part-time employment, we went up 33.5K. And in November, guys, part-time employment actually decreased. It was down 3.6K. So these are some great numbers. As far as wages go, we were expecting them to stay steady at 3.9%. They did drop to 3.7%, which of course will make the Bank of Canada happy. So job gains were broadly based across multiple industries, led, of course, by educational services, transportation, and warehousing. The public sector, we had 40,000 new jobs in the public sector, while 27,000 were in that private sector. Now, the strength of these job numbers, this is where the issue starts to come up. This is part of what caused a market reaction on Friday. So the strength of these numbers, they have increased the chances that we could get a pause in January with the Bank of Canada. However, let me say, they increased them, but we're still slightly more than 50% chance that we will get a rate cut in January. So right now, before this report came out, the odds of a rate cut were around 71.4%. Now, after this jobs report, that has dropped down to 56.2%. So that has the market a little bit worried. On the Canadian side of the border, oh boy, dropping down to the U.S. Oh boy. So in the U.S., their unemployment dropped down to 4.1 from 4.2. Their employment, they were expecting about 155,000 jobs in December. They blew that away. They almost doubled it. Almost. They came in at 256,000. So, oh boy, this is a lot of strength in the U.S. economy. And this is what got people upset, because looking at this data, It's almost a done deal that the Fed is not going to have a rate cut in January. In fact, I think right now, odd makers are putting it at about a 2% chance that we get a rate cut in January. The other thing too is that with this strength, and if this strength keeps coming, there's a good chance there won't even be a rate cut at all this year in the United States. That, of course, had the market in a complete, I'll use the word, in a complete tizzy. They're not happy at all about this. The stock market, loves rate cuts. They love lower rates. And the stock market has rate cuts already priced in. So when this happened with the US Fed, all of a sudden the market's just like, what the heck? It drove people into basically a sense of fear. So right now the market is dominated by fear, at least on Friday. Now, guys, here's the good news about this. The good news is that we recover from a lot of these big emotional responses to things like reports. They usually don't last long, and they usually go a little bit bigger than they should have. So, and we already started to see this as the markets were closing on Friday. The last little bit, like the last hour, we got green candles right across the board in the TSX, the S&P 500, the NASDAQ, and the Dow Jones. So that's fantastic. That to me indicates that, okay, yeah, it did go a little bit over. And that means that at least for the opening of the market on Monday, we're probably going to get a green start. Now, where we go from there, that's going to be hard. That's a bit harder to tell, but I think there's a chance. I think there's a chance of at least a green day. It's going to be really interesting. I think right now, until we get this inauguration done and over with, there is a lot of uncertainty. So in this inauguration, I think it's like a week from Monday. So we may have one more week of some craziness on the market, some high volatility. And then we'll see. So it'll actually be interesting. This week, we're going to be sitting here one day, T-1 to the inauguration. Oh boy. And as from what I've heard too, Donald Trump has about 100 executive orders he's all set to sign. He's gonna have cramps in his hand by the end of the day, that's for sure. All right, Mohammed says, let's see, go heavy on cash, waiting for Trump's tariffs to pick up some Canadian stocks. Yeah, that's not a bad strategy. It really depends on how this market is going to react. And now we're at a point, and this is the thing, for the longest time, I have said I didn't think these tariffs were going to happen. Absolutely didn't think they were going to happen. But now with all of his posturing about wanting to bully Canada into becoming the 51st state, I still don't think that's exactly what he wants. I think he wants something else. But there's that and the whole Greenland and Panama Canal and all of the craziness that's been going on. He may very well drop those tariffs, and it could be rough. The thing is, Canada can absorb it, but it does put a lot of negative pressure on the economy for sure. So we're going to have to see how that rolls out. Maybe what'll be really interesting is once we see what his true game is. Now, what I think, and this is 100% spent, 100%, not per spent, but 100% speculation here is that I think he wants an economic union, not really, making Canada the 51st state or even, affecting our sovereignty, but more of almost like what Europe has, almost like the European Union. I think he wants that for North America. So that I think is going to be very, very interesting to see once we finally figure out what exactly he's after. Initially, we all thought it was just the borders. Like, hey, we'll throw these rates up, but I want you to fix the borders. I don't really care about the tariffs. But now it's looking like there's a lot more going on here than meets the eye. Let's see. And there you go, Mohammed. You said it twice. That's fine. Bleak is in the house with a hi, all. And we got Mary in the house. Happy Sunday. Hit the like button. Yeah, guys. Mary is like in charge of the like button. So when she says hit the like button, you got to do it. I I have to have a coffee whenever she says it. It's just, it's not Starbucks. It's just homemade coffee, but still. Excuse me. Woo, that was good. I loved it. Loved it. All right. Vic says 40 here, 13 likes. Holy banana bread. Yeah, guys, if there's 40 of you here, we should bare minimum have 20 likes, right? At least half of you at the very least. And Vic says, I pulled over just to like. And Vic's driving like an 18-wheeler. So if he can pull over an 18-wheeler just to hit the like button, guys, you got no excuse. There's no excuse at all. Prairie says, I lucked out and snagged CNR moment before it turned around at the end of trading at its lowest on Friday. Nice. And I'm jealous. I am jealous. I did add one CNR to the challenge a week, actually the previous week when it hit a low. And I was thinking I got it at a good price, but then this week happened, and I'm like, no, I didn't get it at a good price. But what can I say? Northern Gal says late to the party on double speed, so we'll catch up soon. Love the beaver, Candace. Or Canada Ace. There we go. I'm taking over Canada and I'm renaming it Canada Ace. There we go. Oh, Canada Ace. That would be funny. But it could happen. No, it probably wouldn't, but that's fine. All right. Let's pull up our next news story. Of course, this is our Parliament Hill Roll Roundup. I have a feeling we're going to have more of these the way things are going. So, of course, between last week and this week, we had Trudeau proroguing the government until March 24th and announcing his intentions to resign once a new leader can be selected for the Liberal Party. All right, that's cool. Now, they do expect to have this all done and have a new leader by March 9th. So, that gives that new leader a tiny bit of time to get things in order before the government starts back up again on the 24th. Now, the new leader will more than likely be looking at, of course, an early non-confidence vote and an early election. So Trudeau's not giving that poor person a lot of time to sort of make the party theirs, which is, if you're supporting the Conservatives, you're probably happy with that because it will still feel very much like a Trudeau party going into that election. And yeah, like right now, I think the Conservatives are roughly at a 27-point lead in the polls. So we know they're going to lose. But as for the new Liberal leader, we do have some candidates. So the people right now who are confirmed, we got the former Bank of Canada governor, of course, Mark Carney. We have Chrystia Freeland, Christy Clark, who was the former BC premier. She is in there as well. Also, the House leader, Karina Gould, is also up for the run. And then a few MPs, Jonathan Wilkinson, Francois Philippe Champagne, Chandra Era, and also Frank Bayliss, who's not currently an MB, sort of in the same role as Mark Carney, but he has thrown his hat in there as well. Two other runners who we thought might put their hats in have actually said, nope, they're not doing it. And that's, of course, Stephen McKinnon and Anita Anad. So both have said they're not seeking leadership. Now, right now, contenders have until January 23rd to officially declare themselves. So we might see a few more before all is said and done. Oh boy, what a mess. What a mess. I just want an election. I want some sanity back in the government. Is that too much to ask, guys? Is that too much to ask? But that's what I'm hoping for. Let's see. Tim Smith says, just got out of jail, did a quick 30 days for a mostly non-violent crime. What did I miss in the market? Tim, I know you're lying because you've more than once messaged the chat in the last 30 days. So you can't pull that one over. You can't pull that one over on me. But welcome back to being, law abiding. I'll still give you that. Perry says, I'm I was glad I missed my target price last week, sat patiently all week. Yeah, sometimes it can be a blessing if you miss a price and the market decides to go a little bit further down. So that's not too shabby at all. I like that. I like that for sure. All right. Well, we're slowly getting through that. We're slowly getting through the news. Now, this story here, of course, ties into the last story, and that's all about our good old trade war. So, as I mentioned, Donald Trump is really going on about annexing Canada. And he actually said in one of his press conferences he plans to do it not by military force, but by economic force. And of course, these initial tariffs could be a part of it. And we're looking at 25% tariff right across the board on all Canadian goods. Now, Canada is preparing to strike back. So the government, even though we're prorogued, there is, some of the cabinet members who are working on what they're going to do and how they're going to strike back. So this could be interesting. So we got a couple of interesting things about it. So first of all, what does this mean if these tariffs hit? So right now, we could take a hit as much as 3.8%, and that's according to economists from Scotia Bank. They're thinking 3.8% hit to our GDP, and if we have a full retaliation, we could be looking at a 5.6% hit to the GDP. And we've seen this before. We've seen other economists sort of saying that same thing. And they're also saying it could, this type of a trade war, the damage could take a number of years for us to really feel the full wrath of it. So that doesn't sound good. I don't like it when somebody uses the word wrath when it comes to the economy. Now, according to the Canadian government's draft plans for trade retaliation, what they're looking at is they're looking at throwing tariffs, of course, on all of the items that they used in the last time. So basically, the last time Trump was doing all of the threatening around NAFTA, things like I think Scotch bourbon is on that list and a few other things. But they're looking at putting all of those on, and then they're going to add more items. For one, I think Florida orange juice is going to be the one that they're going to add a tariff to. Now, there have even been talks of a tit for tat full 25% on everything from the US, but that is only an idea, not in the draft, and it is unlikely to happen, at least initially. More likely, the government's going to look at strategic products like energy and steel. So that'll be very, very interesting, I think, as we sort of see how this all sort of unfilters. There will be two losers, though. The losers, of course, are going to be the Canadian consumer and the American consumer. Trump is not, I don't think he's completely looking at how much of this is going to impact. If you look at energy alone, and this is the big thing, and this is the part that, this is one of the reasons a lot of people think that Trump will try to put an exemption in for energy. The U.S. produces a lot of energy. They pull a lot of oil out of the ground. But the problem is, most of their oil, as I said before, it's coming from out of shale they're using fracking. So they're basically pumping water in between the shale to pull out the oil. As a result, a lot of the oil that they have is light crude. Unfortunately, now they do have some capacity to process light crude, but a lot of their overall capacity for production, oil production, is for heavy crude. And they don't have enough of that heavy crude. But guess who does? Canada. Our crude is heavy crude. America loves it. America needs it. And they take a ton of it from us. So if you were to start throwing tariffs on that heavy crude, that's going to come back and bite America in the butt. They have insane numbers. Like, they have a lot of people whose jobs are just to process that Canadian crude. And all of a sudden, if that starts slowing down, or, we're not selling as much, or they can't buy as much because of all of these tariffs, that's going to have a huge impact on the U.S. And I don't think he's fully thought that through yet, but we'll see. We'll definitely see. All right. King of Day says, late but here. Hello, everyone. Always good to see King of Day. And we got Ferris in the house as well. Tim says, I'm not sure what happened, but Danielle Smith went to Mar-a-Lago and now she's engaged to Baron Trump. Forget tariffs. Canada may be getting a dowry, 250 for everyone. Um, Danielle Smith has a lot of good plans. One of her big plans, she actually wants to double the capacity of oil that she's sending down to the U.S. And Polyev has said, yeah, definitely. Polyev is on board with that. So that's one thing that she wants to do. And she wants to do it by something called twinning. So what twinning is if you already have one pipeline down, you've got all of the regulatory approvals for that pipeline and for the land that pipeline is running on. So when you do twinning is you just run a second line right next to it like a twin. Then, of course, you've doubled your output and you don't have to go through all of the regulatory hoops to get that second line in. So that's one of the things that she's looking to do to try to take advantage of, especially of Trump's big push towards energy. So, let's just hope we get around these tariff things sooner than later. That's what I'm hoping for. All right. Fair says U.S. Fed rate cut is crucial. Yeah, and this is one of the other problems. Like, we've already talked a little bit about the Fed cut, but considering the fact that Canada is, we're in that situation where we are still going to be doing rate cuts. If the U.S. Fed does no rate cuts, that's going to move us further and further away from the U.S. rate. And that, of course, means that for especially foreign investors, they usually like to go for the country with the higher rates. So they'll actually be looking more towards the U.S. and they'll look to Canada. So that's one of the reasons that's one of the other reasons. And it also, of course, impacts the Canadian dollar as well. So, I don't want to see a 65-cent Canadian dollar. I think right now we're sitting at 69 cents roughly. So I'm hoping we don't see that. All right. Farah says Trump wants natural gas to be used, but Elon wants EV. Let's see. Interesting. Yeah. Interesting dynamics. And this is the thing. Elon has to be a little careful. If you look at people that no longer have use to Trump, it doesn't always end well for them. So Elon wants to make sure that he doesn't push things too far. So I think in this case, Elon, you know what? Yeah, there's nothing wrong with EV. And I think Trump will be fine with EV. But right now, let him have his energy. Let's see what happens. Wayne says, can the U.S. rate announcements, Canada and U.S. rate announcements are both on January 29th? Yes. That's going to be an interesting day. I hope that's I think it's a Wednesday. So we'll definitely be talking about that on the market close, of course. So I can't wait. That's going to be fun for sure. All right. Oh my God, we're getting through the news faster than normal. I like it. I do like it. All right. Got a uranium story for you guys. So those of you who are familiar with CCO, they are, Cameco, they're Canada's largest uranium producer. Now, in 2024, they actually increased the production by a third at both of their Saskatchewan mines. Now, why are they doing that? They're doing that because right now there is expected to be a surge in demand of uranium. And the demand itself, it has been rising. Now, Canada's overall uranium output is likely to double over the next 10 years, which is great. This is what's fantastic about that. This would make Canada the number one producer of uranium in the world. Right now, it's Kazakhstan, however you say their country name. They're currently right now in number one. Canada's sitting in number two. This is going to leapfrog Kazakhstan and get Canada up there at the top. Now, demand overall for uranium, it is expected to double by 2040. And this is, of course, because there's a lot more interest right now in nuclear power. So 31 countries have pledged to triple their nuclear power output by 2050. And tech companies are investing in nuclear power, basically nuclear power to get their data centers up and running. Like AI uses a crazy amount of power. So, it's to me, it's a really good thing. What we're looking at now, the other interesting thing with uranium too is that for the longest time, we had we actually had a surplus. I'm not talking about Canada, but I'm talking about the world. So back, if you go further back, all the way to Fukushima, when that all happened with that whole tsunami and the radiation, there was a big push. There was a whole bunch of negative worldwide sentiment towards uranium, towards nuclear power, and a lot of nuclear power plants got decommissioned. A lot of them shut down. But now a lot of those ones that got shut down, they're starting to reopen them. So the world has come back. So we basically had about a 10-year period, so a good decade, where uranium was just simply, there was just a lot of it on the market and not enough buyers. But now it has changed. And we, of course, can thank AI, and AI will use more and more power. And it's kind of an interesting thing. I've heard people say, oh, we shouldn't be using so much power. And that's ridiculous. We should use as much power as we want. If you just look at the amount of power, free power that's available. So just look at the sun. The sun is producing more power than we can ever hopefully use. There's so much free power out there. Nuclear is another nice, clean way. And we are getting better technologies, of course, to make nuclear more and more safe. So I'm loving it. I'm loving it. I think this is a fantastic thing. I think CCO is probably a good company to be looking at. At the very least, maybe you're not ready to be investing in uranium, but I think it's worthy of being on most people's watch list for sure, at the very least. All right. Okay, guys, let's jump to the next story. All right. So debt. I got a story about debt. What do I don't have a story about debt? So the millennials. I don't know how many millennials we have here, but millennials have just overtaken the boomers to become the most indebted generation. So currently, they're now holding 38% of all Canadian debt. So that works out to about $911 billion. So a big reason for this is, well, millennials are now at that age where they are buying houses. They're starting families. They are taking on a whole ton of debt. Now, in that same report, 26% of Canadians overall say they will not be able to pay at least one of their current bills or loans in full. That's a lot. That's a lot of Canadians. Now, if you narrow that down to just the millennials, that does rise to 35%. So that's pretty big. Now, despite this, 22% say they intend to take on, and we're talking millennials, 22% of millennials say they intend to take on more debt or refinance in the coming years. It's a sign that millennials are turning to credit to make ends meet. So not a good situation. I mean, there is a lot of debt out there. What can I say? It's not the best, that's for sure. Let's see. Tim says, do you ever see Cameco raising their dividends? It's only at 0.23%. That's a good question. It really is hard to say. Like, I think right now, to meet some of the growing demand, they're going to be more focused on growth than dividends at this point. But I imagine once they've risen up to that point that they're meeting the growth fine, it could be a possibility, but I wouldn't count on it. For right now, CCO is going to be a growth stock. I think they're going to be a growth stock for a while. I don't see their dividend getting above 1% before 2030, or maybe I don't want to say 2040. I can't go beyond 2030, but I don't think they'll break 1%. So yeah, it's fun. Tim says, I have a student loan debt. I make a middle-class income, but it's low enough so that I'm not charged interest on the loan. I make monthly payments about $360. Okay, well, that's not too bad. But it's kind of interesting. Like, how many people out there go out and go to university and take things that are just useless? I think there's a lot of people that pile on debt without needing to. So, for example, like, I'm a fan of university, absolutely, big time. But I'm a fan of having an ends to a means. So, for example, if you want to be a geologist, you're going to need to go to university. You want to be a doctor, you need to go to university. You want to be a mycologist, you need to go to university. Simple as that. But you get a lot of people who will go and they'll just get like a Bachelor of Arts and they don't really know what they want to do. They pile up a ton of debt. And then they can't get a job. And it's like, well, what is the Bachelor of Arts even going to do for me? Um, so I always say, use your head. So right now, if I was coming out of school, looking towards university or looking towards a career, unless I had an inclination towards, something specific, whether it be science, engineering, maybe I want to be a lawyer, things like that. Those will be fine. Those are fine for university. But if I really am like, I really don't know what I want to do, maybe I'll get a Bachelor of Arts, I would be better off as that student to perhaps go to a trade school because they're going to be in high demand. You take anything, like you take a carpenter. If you go and become a carpenter nowadays, you've got it made. You've got it made. There are tons of jobs, and that's not going to change anytime soon. So just something to keep in mind. All right. We got a JJ in the house with a howdy. Hello, JJ. Good to see you. Ian says, I'm a millennial, debt-free. Ran from debt most of my life. 2 car loans and a mortgage is the only debt I've ever had. Nice. So yeah, I mean, Ian, you're making the rest of the millennials look bad for sure, but there's nothing wrong with that. It's kind of that thing. I avoided debt for the longest time. Ironically, though, it actually was hurting my credit rating because I didn't have I didn't have credit cards. I didn't have any debt at all for the longest time. And then when I finally needed some debt, it was funny. I went in and they're like, yeah, your credit rating's toast. I'm like, why? There's nothing on it. And they're like, yeah, exactly. I'm like, oh. So sometimes it doesn't hurt to take a little bit of debt and then just use it responsibly, just so you do have that credit rating for when, of course, you do need debt, like maybe you want to buy a home or something. So something like that. Wayne says, I would not be surprised to see Trump raise the withholding tax on U.S. dividends from 15% to 50%. It'll be interesting to see what he's going to do. And here's the whole thing, like the whole Department of Government Efficiency. It'd be interesting to see what type of things they want to start cutting too. So it could be very, very interesting. Like I think Trump's idea of just coming in and hitting everybody with tariffs to pay for all of his plans, I don't think it's going to work as easily as he seems to think it will. But we'll have to see. We'll have to see. I don't know. Oh boy. All right. I do have a Scotia Bank story this week. So Scotia Bank, they're beginning to pull all of their banking operations out of Colombia, Costa Rica, and Panama. And they've actually transferred all of those operations to a company called, oh boy, I'm going to crucify this name, but it's Da Vinavida. Anyway, something like that. Basically, they're basically getting a 20% stake in this Central American company, and they're taking over all of their stuff. So in the last year, Scotiabank has been shifting most of their business back towards the U.S. and Mexico and out of Latin America. Because Scotiabank used to be the really big, the one of our banks that had a huge presence in Latin America, but they're pulling out. They're pulling out. Now, a part of the reason for this, of course, is some of the Latin America returns have just not been great. So that, of course, has put a bit of a motivation on them. They're not making as much money as they had been anticipating. Now, this actually may be a good thing. Back in 2023, Veritas Investment Research, they did come up with a report that actually found that the best performing Canadian banks were the ones that stayed at home. So I think Scotiabank is taking a page from this, pulling things back a little bit. And there's nothing wrong with that. There's nothing wrong with that. we'll have to sort of see. And we've already seen as well that Scotia Bank has been they've been boosting their investments in the U.S. So that's perhaps not a bad thing. I think if we stay within North America, probably good. It's probably good for them. All right. We're almost done the news, guys. Holy banana bread. It's very rare that we're done the news. Sometimes we don't even start the news in the first hour. So this is cool. This is cool. All right. Ian says, I use that bank's ATMs. I don't know how to pronounce the name either, but you know who I'm talking about then. That's as long as you know who I'm talking about, then I'm like, okay, I'm good. I'm close enough. I'm close enough. But yeah. Anyway, interesting. All right, let's close out the news. So this week we had the big CES event. So CES is basically all of the fancy new tech, and this is pretty cool. One of the stories coming out of CES that really caught my attention was John Deere. So John Deere, they have announced a host of fully autonomous vehicles that will, they're saying they're going to completely revolutionize farming, landscaping, and construction. So amongst these vehicles, they're planning to show off. They have an autonomous tractor. They've got a robot lawnmower. Now I've seen a few robot lawnmowers, and that's pretty cool. A crewless dump truck, and then another driverless tractor that's specifically designed to work in orchards. So that's pretty darn cool. Now, John Deere said that its autonomous machines can help farmers address labor shortages while also meeting the growing demand for food infrastructure and housing. Now, these tractors, and this is interesting, of course, CES, one of the keynotes was, of course, NVIDIA. Well, these tractors are going to be running on NVIDIA. So they will utilize, and this is kind of that thing. My first concern when I heard about a tractor out there, I was going back to not the good Superman movie. What was it? Was it Superman 3? I think Superman 3, where you had some of these tractors out there and a kid almost getting, caught by the carbine. Superman saves him, but I was just kind of like thinking, how are these tractors? How can they be safe? But apparently, each of these tractors will have 16 cameras that will give it a full 365-degree view. And the AI, all of its processing is going to happen on board. So no sending it out because they basically want the tractors to be able to react fast. So if a kid did get out in front of it, we don't need Superman. We're fine. But yeah, so basically these, they're designed for maximum safety and, of course, reliability. But that's pretty darn cool if we can start getting all of these machines to start doing everything for the farmers. I don't know if it'll make farming good again, but it's not bad. It's not a bad plan. It's not a bad plan. All right, now coming up next week on our economic calendar, not much happening in Canada, not much happening. And we're, of course, looking forward to that rate decision on January 29th. Now, the U.S. does have more data coming out, inflation data. So they have their PPI coming out on Tuesday, the 14th, and on the 15th, we got the CPI coming out. Also, we got some retail sales data coming out on the 16th down there in the U.S. So definitely interesting. Not a lot coming out earnings-wise. It's a pretty slow week on earnings. I guess up here, probably the biggest earnings we have coming out would be Cogeco. So Cogeco Communications, so CCA is coming out. Down in the U.S., Delta Airlines, DAL, and WD-40. So WD-40 is having some earnings coming out. That could be a slippery slope. I just, so that's... Holy banana bread. We are done. We're done the news. Gotta love it. Gotta love it. All right. King of Day says, robot snow shovel. That I would buy. Oh, King of Day. King of Day. All right. These robot lawnmowers. I watched a video on one of them, and it had attachments. So, you could make, it could mow your lawn, and in the winter, it becomes a snow blower. A snow blower. So that's really, really cool. So, you could get one of these and have it, you don't have to do anything. Um, so that's kind of cool. Now, I personally here's the funny thing. I cannot use a snowblower because I get this really weird allergy. And there's a name for it, and I can't remember the name for it. It's weird, but it's basically I'm allergic to vibrations. So if I'm using something like a lawnmower or a snowblower, you know how they vibrate through the handle? I'll get little hives from that. But interestingly enough, my mom figured this out one day. If I take an antihistamine, I can then use a lawnmower. So I assume I could probably use a snowblower as well if I took an antihistamine before I used it. But yeah, it's a weird allergy. We'll leave it at that. 9 says doom and gloom channel predicting big banks failing, pushing penny stocks in the same video. Really? Okay, here, guys, let me just say this. In an economic crash, if let's say big banks are failing, that's pretty much an economic crash. Penny stocks are probably the worst place you want your money. Probably the worst place. So that is hilarious. I'm kind of chuckle. I'm laughing a lot on the inside. I need some coffee for that. Yeah, I mean when the poop is hitting the fan, the places you don't want your money, penny stocks, even small cap. It's risky to have in small cap stocks when the market is crashing. So yeah, that's interesting. Prairie says Robot Farm Wars 2050. I wouldn't be surprised. That would be kind of interesting. But no, I mean, here's the thing. I mean, what are farmers going to do now that they've got all this time on their hands because the robots are doing everything for them? I think that's fantastic. I think that's absolutely fantastic. So, kind of cool. Oh, I can now remove this, and there we go. We'll go back to our normal screen. Haha, we're here. We're there. All right. Coolios. All right, there we go. Ian says, if a tractor cannot operate autonomously, full self-driving has no chance. See how it goes. Yeah, absolutely. What are your top 3 picks this week? That's a really good question. That's a really, really good question. I don't have any stocks at the moment, but let me think on that. And if I come up with some as we're going through the program, I will name them. Let's see. Ian says robot lawnmowers exist but are expensive. Would be nice to have. Yeah, I have no idea how much these will actually cost. But yeah, I imagine they're pretty expensive. But as all new technologies are, they're crazy expensive initially. But once they start catching on and you get into mass production, the price comes down pretty darn fast too. So, hopefully we can all have robot lawnmowers at some point. I mean, basically it's like your Zumba, right? Except for your lawn. Hopefully it's smarter than a Zumba though. I mean, our Zumba's pretty dumb. It's pretty dumb. It gets stuck on crazy things. Let's see. Anchor Tour says autonomous tractors are totally impractical. Okay. Why? I'm gonna throw this back at you. Why are they impractical? So I'm kind of curious where you're going with that. But it's kind of interesting. My biggest concern, I think, with an autonomous dump truck is, will it be able to avoid all of the power wires as it's dumping its load? And that sounded much worse than I meant it to sound. Tim says, a company I've been following for the last few years is Musgrow in the TSX venture. They make an organic pesticide out of mustard seed oil, amongst other things. Let's see. Any thoughts on them or their future? What are they called here? Musgrow. Let's take a look. Boom, bang. All right. Give me a second here. There we go. I've never heard of them. I have never heard of them, but let's see here. Let's see. I got grow. That I do not see them. If you can get me a ticker, Tim, if you can get me like the ticker, maybe I can find them that way. But right now I don't see a must. Well, I will try capitalizing it. Sometimes you never know. No, I don't. Now there is grow here on the TSX. Let me just take a gander at them and see if they're called must grow by any chance. No, just this is a CO2 grow. Interesting. I wonder what that is. Let's see. Plants with the use of CO2 technologies. Okay, that's something different. Yeah, you'll have to give me some more information, Tim. Jonathan says there are robot lawnmowers on Citadel Hill. Really? That's kind of cool. I love Citadel Hill. That's an awesome place. Yeah, lawnmowers. I love that. Anchor says AI will never be cheaper to implement than cheap third world manual labor. Okay, all right. So I guess that's kind of where you're coming from. Then is just the cost. But keep in mind, once again, I mean, everything starts off expensive and it will get cheaper and cheaper and cheaper. That goes for AI too. Like when robots are first commercially available, you won't be, most people won't be able to afford them. They're going to be crazy expensive, but those prices will come down. That's just the way it works. So maybe initially, yeah, a lot of farmers probably will be like, yeah, it's much cheaper to have third world manual labor. But we'll have to sort of see how this all sort of runs out. All right. Northern Gal says, silly question. I was watching your vid that you are parking cash waiting for a bear market. How are you deciding whether we are in a bull or a bear market? Okay. Fair enough. Let's I don't know if I have it. I'm seeing if I have it up or not. I don't think I do. No. There's Jasmine. Oh, no, I do. Here it is. So I'll just go down here and get a little bit of a thing. All right. So normally, a bull market, you're normally going up. You're going up. You do have some movements down and everything. But if you get to a point where you drop, and this is where I start to worry. I start to get concerned around 20%. If I drop more than 20%, we're probably into a bear market. I think 25 is the official amount to get into a bear market. But once I see things starting to move, and usually too, I also watch, I'm not going to just sort of wait for 20% to say we're in a bear market. I may start go defensive way before that. So the way I sort of work things is, as I mentioned, I am adding to cash along the way here. And, and the way I will do it too is, I'm still going to DCA. So I will still DCA. And if we're at the beginning of a bull market, I still might be like a 99% DCA, maybe 1% moving into a cash position, and I'm just going to put ... as we get towards the middle of a bear market or a bull market. And I don't know how long that bull market is going to be, but basically the longer it goes. So usually if I'm a good, 6 months, maybe a year into that bull market, I'm probably going to start changing this up a little bit. So I might be like 97%, 3%. And once again, I love how I can go as far as I want. As we get a little bit further in, I'm going to continue increasing it up. So 95, 5%. And if we're really getting to the point that the bull market just way like it's really, really long, like it's becoming one of the longer ones in history, at that point, I might start getting a little bit more drastic. Like I might all of a sudden, if, I might jump into a 75, 25, and if it keeps on going, I'll move it further and further. But this all, and a lot of it's judgment, because as I said, this cliff, it could happen. It could happen tomorrow. And you don't know when it initially happens, right? Because for all you know, this could just be a small correction. So take, for example, Friday. Now, here's kind of this thing. Friday, we had a catalyst for Friday. So Give me a second here. Let's just move out of here. So, I'm just going to draw this along. And on Friday, we actually had a catalyst. So I'll just put a C here. And that catalyst pushed the market down. All right, that's fine. Chances are the market's going to resume and do its own thing after the catalyst. So if I have a catalyst, I'm not even thinking bear market. But if I start getting more movements down than up, and I've got no catalyst, then I start to take note. And as this all of a sudden, maybe here we're 5% down, and it keeps on moving down, goes up a bit, comes down. Maybe down here we're at 10% down. At that point, I'm starting to sort of think about, for one, while we're in that, once we start going past 5%, once we start moving towards 10%, I will take that cash DCA thing. So I'm just going to put a D here and a C over here. I might at that point, just while I'm there, I may actually completely flip my script a bit, maybe come up to like a 90-10 while that's happening, especially if we're starting to see all kinds of market slowdown right across the board. And you've got everybody, I'm not going to go to YouTube and sort of have, because as soon as we're at, heck, even here, we got people on YouTube saying, "Oh my God, it's about to drop 30%. Hold on to your hats, folks." I'm not going to listen to that. But when we do start to get this big movement, maybe we correct here. And if we correct, I will readjust this back and we'll continue dollar cost averaging. Now, if we start moving down even more, and we're down around 15%, I might at that point, especially if things aren't looking good, I might start flipping this around and I might start buying. So that's kind of the way I will do it. Now, when we do move into, and let's just sort of give another picture here. There's your, all right. So this here being your bull, I'll just put a couple horns there for it. And this here being your bear, let's give you a claw. There we go. It's sort of a claw. But anyway, as I said, going up here, I'm going to be doing it in steps, right? So as we move into a bear market, as I said, in this initial part, I'm probably not going to recognize that we're in a bear market. But as we move into the bear market, I'm then going to do the same thing. But this time, instead of, in this case here, we're cashing. Down here, we're buying. So I'm going to do a lot of dollar cost buying of different things that we have coming down. So, and even here, I might still be buying here because I won't realize, and this is kind of that same idea, right? So when we're coming out, I'm still, we could be up 5% here. I might still be buying, depending on if I have money. I mean, if I run out of money, like on a longer bear market, I'm probably going to run out. Once we're up at maybe 10%, I'm thinking, okay, unless, of course, this thing, the whole idea of a catalyst, you could have that when you're in a bear market too, right? Like something positive could happen and it may cause, a small spike. But if I know what caused that small spike, I'm not going to like all of a sudden say, "Oh yeah, the market's it's done. The market's going to the moon." I'm going to pull back on that. So I kind of use all of this as I'm sort of moving along, and you'll get a feel. Like I don't know how long you've been investing, but we did go through a a bear market back in 2001. It lasted roughly about a year. And most people didn't realize we were out, and it was a long way coming out because from that market, and actually here, let me show you the market. I'll show you that bull market. We'll use VF. We'll actually use VFV. That's what we use. The Vanguard S&P 500. All right. We're going to come back to 5 years. So right here, right here, how I was drawing on the board? Well, this is your bear market. So it began right here. So basically right at the end of 2021, then we went into it and then it ended right about here, basically 2022. So basically, yeah, it lasted about, well, you could even say it only was about 10 months. But yeah, here was that bear market. Now, nobody realized at this point, like a lot of people, we had this little bump here. a lot of people were thinking, oh, maybe it's over. But then we had this that followed. And that's kind of interesting thing. So I think a lot of people at that point thought, oh no, it's not. We're not back into, we're not back into a bull market. So really, if you think about it, and a lot of times you'll look at the bottom. So if you look at the bottom of the bear market, officially 25% above that line right there. So wherever that is, maybe up about here, that's where you officially say that you're in a bull market. And we are. Now you can take a look here at, now keep in mind, I'm going to go further back here. Let's go to 10 years. It gets a little bit harder to see them, but you can sort of see over here, this was a little bit of this looks like it was probably a small bear market. Now this here, that there is pandemic, so you can't really count that, but you can sort of see that, bear markets tend to be smaller and the bull markets tend to be bigger. So bear markets are bigger than bull markets. That's why the market overall will always be going up. There's a couple of exceptions. So one exception is if you look at Japan. So Japan back in the 80s, they had this whole big inflation in their market. It created a top that was very artificial. So they've never, and they call it the lost decade after that. They say they never regained that. But it's not, it's that it was artificial. So you have to kind of look at things. So for example, in this case here, with this top, a little bit of this top here, we'll go back to the 5-year because we can, all right, there we go. So a little bit of this top up here, this here, a lot of it, there was a lot of extra money in the market. So a lot of that extra money was because of the pandemic, all of the government supports. So a lot of people didn't know what to do. Like a lot of people who, were on like minimum wage or they had part-time jobs, all of a sudden they were getting, like in Canada anyway, they're getting like $2,000 a month. Eventually I think it got knocked down to $1,600, but they had more money than they knew what to do. And so they started looking at things like stocks. And that was one of the reasons that we had so much money pulled in here. But once the supports got cut, and this all fell into this all happened during the bear market, a lot of that money came out. And because people had to, all of a sudden, if your supports are cut, you still got to pay your bills. You still got to pay your rent. So that money has to come somewhere. So we had that whole thing happening. It's, it's kind of the way the market works. But hopefully, in that long, convoluted way, I answered your question. Hopefully. If not, throw another question at me. What are your thoughts on Google then? All right. I do like Google. I like Google. I think Google right now is a very good option for long-term. You got to look at it this way. They are knee-deep in AI, and they just introduced the first quantum chip, so Willow. So AI and quantum. Wow, that's a great combination. So I think Google is going to be absolutely a very good investment. You're not going to get like a giant, like you're not going to go in there and it's not going to like 10x or anything like that, but you are going to get some solid growth. And I think it's a fantastic stock for that reason. Let's see. I think it's all one word, must grow. Okay, so here we are. MGR. So MGrow. Okay, let's take a look. What was I at? Just kind of curious. Oh, I was just at grow. All right, so MGrow. Here we go. There we go. They put it together in one word. That's why I didn't find it, Tim. Funny. All right. So of course this, it's technically not a penny stock, but it's penny adjacent. I mean, it's pretty darn close to that. But let's pull it up. Let's take a gander here. Let's just look at the last year for one. All right. So they've definitely had some stimulus here. So they've gone from a penny stock up to here. What are they doing? This is another thing too I like to see. Let's see, Musgrow Biologics Corp. So they're making, and you mentioned that, a natural biopesticide products from mustard seed. I like that. I like what they're doing. I think there's a commercial viability to that. All right, let's go in and take a look and see where they're sitting at right now. So right now they've got a negative. So right now they're not profitable. They're not a profitable company, but they've only got a 15% debt to equity ratio. So they haven't gone crazy on their debt, which is a good thing. So there's potential here, Tim. There's potential. I like what they're doing. Um, would I invest in them? Probably not. Not so much, only because I really don't like investing in non-profitable companies. So that's one reason I would hold back. But I can see potential there. I can definitely see potential there, and it's probably not a bad choice to try, to try to speculate on. But I would not put anything in there that I wouldn't be okay with losing, just in case, because there's a lot of companies that are probably doing similar things. And some of them are going to make it, some of them aren't. And let's say some of the doomsayers on the internet are right, and we do slip into a big correction in 2025, that could be hard on a company like this. But I do like what I see when it comes to what they're doing. I like what they're doing. Not crazy about their fundamentals yet at this point, but once again, they're small. They're small, and I there's nothing wrong. I always talk about play money. So it's still real money, but I call play money that money that you can use on speculative stuff. So if you're the type who's like, yeah, I would like to have a little bit of play money, and depending on who you are, you may have some people $100,000 might be play money. Not me, not in my world. But other people it might just be $100 or it might be $1,000. That's something that you could certainly play with that. But with play money, you got to be prepared that you could lose it. You could lose everything. So it's something to keep in mind. All right. Let's see. Nanho says, I saw a robot lawnmower in Thailand when I visited in 2018. Nice. Nice. Well, the ones I saw on some of the videos from CES, and guys, if you go onto you, well, you're on YouTube now, but later on, if you're curious, just look at some of even just go and look at some of the highlight CES videos. There's a lot of really cool stuff that's in there, like really, really cool. I'm loving it. King of Day says, I'm speculating that the market will go up after Trump's inauguration, similar to when he was elected. I think there could be a strong ending to January. I would agree with you on that. Oh, guys, let's end this poll here. All right, I just want to take a look here. All right, so right now, guys, everybody, you guys are thinking 39% of you feel the market's going to be red, 34% think it's going to be green, 20% flat, and 7% wanted to just get this poll out of the way. All right, there we go. I'm closing that poll. Bang, it's done. 9 says, I think the dip before the 2020 crash was repo rate spiking. Okay, fair enough. Fair enough. And that might have been it for sure. Ian says, people freak out about the angle of the chart. Think it's got to be a bubble. After you factor in inflation, it's not that crazy as far as gains go. No, absolutely not. That's the thing, too. A lot of people sort of don't realize that, inflation applies to stocks as well. So you could look like if you've gone through a big inflation period, but your stock price is still the exact same at the beginning and end, that's almost like you came down a little bit because if you adjust it for inflation, you've actually the stock's actually fallen a little bit. So it's one of those things like when you're looking at an investment to be successful, you don't want to just beat the market. You want to also make sure that you're beating inflation as well as the market. So you don't have to add them together. Obviously, if inflation is 5% and the market came in at 10%, you came in at 11%, well, yeah, you beat them both. But if for whatever reason, if the market was 4%, inflation was 5%, you want to come in like 6% or better just to beat that, to make sure that you're not losing any value, because that's kind of a big thing. But mind you, and I know a lot of you guys have some pretty big dividends. That probably helps a little bit too. Let's see. Thank you, Candace. I appreciate the explanation. Oh, no problem. Lisa says, I think a lot of people who collected CERB had to pay it back. I know some people did, definitely, especially if you weren't eligible for it. That was the whole thing. It's whether or not you were eligible. I mean, if you were eligible for it, then you don't have to pay it back. That was just free money from the government. But a lot of people who did go on the CERB, a lot of them would do things like, for example, when their jobs called them back, their minimum wage jobs or their part-time jobs, they were like, no, I don't want to go back. So that would make you ineligible, of course. So definitely, definitely a lot of people, I think a lot of people abused it, and probably they're not going to catch everybody who abused it. There's probably a lot of subtle ways that you could have abused that for sure. Okay. Larry says bounce for earnings this week, drop from worry about earnings next week as usual. I think. Yeah, absolutely. Let's see. Love the poll. Hi, everyone, especially Candace. It should be hi, everyone, not just me. Come on, everyone's important here. Goat, greatest of all time. I love the goat. I love the goat. All right. Naylor says BB, BP. Yeah, BlackBerry. I mean, look at the guys. We're here. Let's go over here. Whoops, I'm on the wrong page. I had to pull up wrong page to actually. All right, but yeah, BlackBerry's been doing pretty good in the last little while. I mean, even Friday, look at this. Friday, they were up 2.8% when, the rest of the market was kind of, but yeah, look at them in the last 6 months. They've had a big spike because a lot of it too is a lot of the quantum security, some of the cryptography. That's what they're working on, especially for also for cars as well. So that's really, really helping them. I think and I can't believe I'm saying this, but I think BlackBerry may become relevant again, which is it's fantastic. It's like because you kind of look at BlackBerry as a company that is just they had their day, it's over, but no, they're coming back. So I'm liking BlackBerry. Let's see. Stay calm and buy more Daily Journal. Nice. Michael says hello, Candace. If time permits, can you share your thoughts on AlphaFin Resources, a tin company in Congo with a dividend? See if I can find them. Let's take a look. ALPH. Let's see. AMIN. AlphaFin Resources right here. AFM. Okay. All right. So, and they have a dividend, do they? Holy banana bread. They got an 8.411% dividend on a stock that kind of looks like it's a penny stock, but let's take a gander here. All right, they've got some interesting movement here. I'm kind of curious now. Let's come in here and take a gander. They are profitable. Look at this. That's a great return on equity, Michael. 21.96%. Return on assets 13.63. That's good. They don't have a lot of debt. Wow. And they actually doubled that dividend recently. What the heck? That's not bad. Kind of curious. Let's take a look here. Are they gold miners? Is that what they're doing here? Oh no, tin. You mentioned tin concentrate from the Bazis tin mine in the Democratic Republic of the Congo. Okay, interesting. Now, going back to the previous one that we were looking at, this one would interest me more. I'm a little concerned about a dividend at, what's their market cap? Let's see here. Okay, they've got a $1.3 billion market cap. So that's not too shabby. It's not too shabby. As far as penny companies go, this is not bad. They do have they are in the positive. I'm surprised to see. It's always weird to see a really large dividend on a small company. Now I wonder, I'm going to go back 5 years, 10 years. No. I was almost thinking that maybe they at one point had been bigger, but have come down. But no, they're not bad, Michael. Not bad. This is one that may not be a bad one to put your play money on for sure. Huh. AFM. That I like. All right. Very cool. All right. And 9 says we need a Bitcoin crypto coin. I know. Good old Bitcoin. Everybody loves Bitcoin. All right. Larry says one of my friends from Tesla now works at let's see, Scythe Robotics. Now they have a robot lawnmower that works right now. Nice. Yeah, I mean, and the ones I saw, like I was watching this one robot, and it had attachments. Like I said, you turn it into a snowblower in the winter, and that was really really cool. Candace is the goat. All right, well, hey, why not? Who's ready for overnight markets at 8? Well, there you go. I'll wait till tomorrow. I'll wait till tomorrow. I'm good. I'm good with the market. Um, King of Day, BlackBerry, just refusing to die. Yeah, absolutely. Let's see. Many thanks for your comments on Alphamin. I might add it to my tiny position. It's interesting. The next 0 to 100K challenge. I'm looking at. I'm going to talk a little bit about speculation in it, and I did pick up one quantum stock for speculation, but maybe I need to balance it out with a small little position in this too. Oh wow, that's kind of cool. We're adding play money to the the 0 to 100K. It's hilarious. Let's see, and get paid while I wait for growth, hopefully. All right, and I'm just gonna very quickly, guys, because yeah, I'm just there we go. I just took a quick screenshot of AFM just so I don't have to look them up. Because I think I would like to, I probably might do that. I might do that. I like that one. That's a good one, Michael. All right. Jackie says, VCI just issued 99,999 stock options to an officer. What does this mean and how does it impact the stock value? Thanks. VCI. I've heard of VCI. I think I've had them in a chart before. All right, let's pull up. Yeah, virtuous gas. Glass, sorry. I say gas, but glass. Yes. I think I had them in one of my lists about maybe a year ago. All right. Let's take a look. Yeah, they used to actually be doing some, they used to have some pretty good movement on them at one point. So I think it would have been during this run up that I probably touched them. But so yeah, they do. Yeah, I remember this fiberglass. So they do glass waste to the fiberglass. So yeah, now 99,999 stock options to an officer. That's interesting. I don't, like I said, I don't think I have enough. I haven't dug that deep into options. Like I know all the basics, but I don't think I have an answer for you, Jackie. I would have to research this one, but I will. I will do that. Unless somebody here, maybe Larry. Larry does do a lot of options in here. Now, my initial thoughts, and I just highlighted this one here. I'm thinking that, actually, you know what? The more I look at this, I'm thinking that we're not looking, okay. I think I know what this is. Let's step back. I don't think this is options. This is not option trading. So some people will, for example, instead of taking a salary, they might elect to take stock options instead. That might be what's happening. So what ends up happening is if you take stock options opposed to a salary, they're basically paying you in stock. They're not paying you money or cash. Because they're paying you in stock, you've got no income. So tax-wise, that becomes a huge thing. So then what, for example, what this officer, might do is they will, to get money, they'll basically take loans out against their stock options. They'll use it as collateral, and then they can write off, and this is the beautiful part, they can actually write off the interest they're paying on them loans. So they create a tax, it's a tax situation. It's the same idea like if you buy art. So, you buy $1 million picture, you're not buying it because it looks great and you want it to hang in your wall. You're buying it because you have collateral and you can take out $1 million loan. Well, probably not a full million, but you could definitely take loans out with it as collateral, then use the interest on those loans. You could use them as write-offs. So it's all about taxes. So I'm pretty darn sure this is exactly what that is talking about. That's what I believe. I had to think for a second, and then it popped into my head. I'm like, okay. All right. Larry's saying dilution. Now, yeah, if now, Jackie, if those 99,999 stock options, if they're actually diluting the stock to pay him, then it would lower the price. It would be dilution in that case. But we don't know yet if that's exactly how they've acquired those stocks. There are multiple ways you can do it, but there's probably a good chance that there could be dilution involved in there. Um, yeah, there might be. There might be. Ryan says, I saw a YouTube ad that had an automatic snow shovel blower. It shoveled an entire driveway by itself. Yeah, exactly. Um, I mean, consider depending on where you are in Canada. Um, just think about having an AI shovel your driveway for you. I know here, like I'm in Ottawa. It's not that bad this year, to be honest. We've had cold, but we haven't had a lot of snow. Now I might have just jinxed Ottawa. So anybody else here who's in Ottawa, if we get a big snowstorm, it's probably my fault. I apologize. Let's see. Northern Gal says, you asked how long I have been investing. Far too long to be asking these. About 30 years. Lots of luck, I think. Okay, fair enough. Fair enough. I only ask that is that, because I know with my channel, I sometimes get a lot of brand new investors popping in. So sometimes I never know. I never know exactly how much experience different people have. Sometimes I look at the questions they ask and I try to sort of parse it together from that. But yeah, 30 years. Nice. I like that you've been investing for 30 years. That's a good amount of time. And if you've said that you've been having some luck, then I'm liking that too. Larry says, Buffett and Munger have rallied against stock options. Everyone pretends it's not a cost, but it is, and it dilutes shares. The big businesses had Congress declare giving out shares is not a cost. Yeah, exactly. And I know for the longest time, I think Elon as well was getting stock options instead of salaries. So yeah, it's a way to avoid a lot of taxes. Michael says MFA book value is 1842 to close at 955, which pays a 35-cent dividend each quarter, which oversold, which upgrades from 11 to 14. Nice. Larry says, I took stock options as payment at Tesla because no tax, but as a shareholder, I was firmly against it and outraged. Yeah, absolutely. I mean, and that's the thing. I mean, if you're the one getting the stock options, it's fantastic. You're not paying income tax, and yet you are being paid, which is really kind of a loophole in income tax. It's a huge income tax loophole. But yeah, if they're diluting the shares to pay you though, then pretty much every single shareholder has paid a little bit of your salary. So that's not, and if you think about it too, from the company's perspective, in a way, all the shareholders are paying your salary, not the company per se. So, you got to put all of that together. Enid is in the house with a good afternoon, everyone. Have had any snow in Vancouver this year? Oh, nice. I used to live in Vancouver, like quite literally. I was actually living in Vancouver the year of the Winter Olympics, and let me tell you, I don't think we had any snow that year. In fact, when the Winter Olympics was going on, it was pretty much t-shirt weather in Vancouver. For a lot of the events, they had to truck snow in. They had to truck snow into for a lot of the different events. So, I mean, it was crazy. It was crazy warm, but that's kind of the way it is. Now, mind you, you will get a good amount of rain. So, you definitely want to have your umbrella for winter in, in Vancouver, but you do get the occasional year where Vancouver gets walloped. So, and here's the thing with this year, now that La Nina is firmly in place in the Pacific, that means the rest of the winter might be a little colder than normal on the West Coast. So if you're going to get snow, that La Nina might be helping that become a possibility before the winter is out, but hopefully not. Hopefully not. Mario says Hamilton has a new ETF coming out called HFH. HFN. Nice. Nice. HFN. I don't know what that one is for, but now I'm going to have to look at that, Mario. Interesting. Ina says, yes, we get lots of rain. Yeah, absolutely. HFN. You got me just curious. You got me curious here. Let's take a gander and see if we can see what this is all about, guys. HFN Hamilton. Let's see what we get here. Here we go. Canadian Financials Index. Nice. Here we go. 0% management fee through to January. Okay, I like that. But fund objective. They want to replicate the Selective Canadian Financials Equal Weight Index. Interesting. So it's almost like ZEB, except for it looks like it's going to have, in addition to the banks, it's going to have some of the some of your like your Manulife Financial, so your insurance type companies as well. No, I don't need that, guys. I wonder. All right. Now that's the management fee, though. But are they tricking us? What is our? I don't know if they're going to give us an MER. Actually, this Hamilton is hard to find the MER. Anytime I'm doing a Hamilton company, I have to fight for the MER. But they are using leverage on this one, so much like HYLD. So 25% leverage there. Interesting. Do I have? Just kind of curious to see if we can see exactly what they're holding here. Let's see. There's their overview. There's their distributions. All right, so 4.6, that's their estimate there. Okay, interesting. All right, let's go their holdings. Okay, so they've got Brookfield. Oh, Brookfield Corporation, love it. Fairfax Financial, Manulife, Sun Life, Bank of Nova Scotia, Great West Life Co. Very cool. Royal Bank. National Bank. I love this. Guess who's not here? BMO's not here. That's interesting. They did stick though with Toronto Dominion. Oh, interesting. Yeah. So management. Oh, there's a little asterisk here. Come on, asterisk. Bring it up here. They're not telling me what that asterisk is. Let's see if there's a thing down below. Yeah, we'll have to hunt and find out what the management expense ratio is on this. I imagine it will not be 0%. So you're probably still paying a fee, but it'll be interesting. But I like it. It's kind of a neat one. It's a neat covered call, or actually not covered call. I don't think this one has covered calls, or maybe it does. Let's see here. I know we have leverage. Oh, wait a minute. No, this one does not have leverage, guys. This is HFIN, so there's a leveraged version of it as well. Okay, I see that now. All right. Interesting. Very, 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 very interesting. Okay. All right. Well, we'll definitely, so that's launching on January 21st. We'll have to take a look more at this one as we go. All right. Tim says, just starting my 5th year of investing, dividend history, year 1, 487, year 2, 829, then 1929, then 2574. So that's not too shabby. So you're almost doubling. You're almost doubling your dividends each year. So it'd be interesting to see if you put in like your total returns and see how that's growing. Missy says, happy Sunday. All right. Let's see. Landra says, CRA is making everyone that received serve payments to pay them back. I'm having a hard time proving that I did not have income during the period I got my serve. People taking legal action. Really? That's interesting. That's very, very interesting. I have not heard this. I've only heard that if you were taking it for the wrong reasons. So those are the people who should have been receiving letters. But yeah, I didn't think it was going to be everyone. So I have to look in on that. That's interesting. Larry says, expiring dates on stock options are the interesting part. You can have 10 years to pay for them. I did, or unlimited time to pay the stock option price or be taxed on stock price differences or lend them. Okay, fair enough. Fair enough. Missy says, "Happy Sunday, Candace. Happy Sunday to you as well." Yeah, we're having a good little Sunday here. Having a good little Sunday here. It's me, my coffee, and the gang. Let's see. Larry says, "So I got Tesla stock options, 10-year expiry for 141 each. I either pay 141 with 10 years for each to avoid tax, or sell it for, let's say Tesla is 500. Yeah, so $359 profit, 25% tax on loan, or loan them out. Yeah, it's not too shabby." Kingsley says, "Hi Candace, new sub to the channel. Love your videos and your humor. Holy banana bread makes me LOL every time you say it." All right. Yeah. It's kind of one of those things. It just became, you know, I don't know if I had intended for that to become a catchphrase. I also didn't intend for not too shabby to become a test phrase, sort of one of those words, catchphrase. Yeah, I didn't expect that to happen, but it did. It did. And people like it. Also, Mr. Math became kind of another one too. But all right, that's cool. It's funny, when I first saw you, Kingsley, I thought for a second it was King a Day, and then I looked down. I'm like, wait a minute, no, that's not King a Day. It's somebody new. So always love to say it. Always love to see it. You guys are like, I love everybody in this community. You guys are just absolutely awesome. You make Sundays a lot of fun. That's for sure. All right, Larry says, "Or give them loan payments since loans are not taxed as income." Yeah, exactly. Let's see, can pay a bank stock options for a loan since loans are not income, you pay nothing. That's what rich people do. Yeah, well, exactly. And that's the whole thing. That is the whole thing, playing the tax loopholes. Missy says, "I hope these tariffs don't tank the stock market." It'll be interesting to see. That week is going to be a very fun week on the market. So I'm saying that right now. It's going to be a fun week. Because yeah, you have both markets, and it really boils down to, like, keep in mind, even if they put the tariff up immediately, a lot of companies in the US, for example, who do import a lot of Canadian stuff, a lot of them are already at the point right now of over importing to be prepared. So that way they got a bit of a buffer after the tariffs go up. Not all, but a lot of companies have been doing that. So it could be very interesting. I think we're going to have to see how this plays out and how long it goes. I think initially you might have a bit of a drop. Like, if people start freaking out, then it will recover, and it will take time for the actual economic damage to really start hitting, hitting companies, things like that. It's not going to be like an instant, like, snap your fingers and everything's all, all over, basically all over, or all to hell or wherever. It's not going to happen that fast, but there might be some reaction to it. There's probably going to be a lot of reaction. I mean, keep in mind, Donald Trump is planning to sign at least 100 executive orders on day one. The market could be anything and everything. So if you're holding money to buy, you might get some crazy dips on Monday. You might, not tomorrow, but a week. It's going to be hard to play. Like, I don't think we've ever had it in this kind of scenario. Yeah, sure, we've had Trump come in before, and he did sign a lot, but this time he's there's a lot of anticipation on what's going to happen. So I'm looking forward just to see. A lot of it might just be curiosity to see what's going to happen. I mean, I will certainly be playing the market, but I will be, when I'm looking at trades on Monday, especially when I'm looking at actual trading opposed to investing, I'm probably going to look at shorter trades. I'm probably going to get in, see if I find an opportunity, get in and out, that type of thing. Because it's going to be fun. It's going to be fun. Even I don't have a full picture of how that day is going to look, but it will be fun for sure. Jay says, "I've been stocking up for HHL with 24.75 shares, and I might top up XCG stock next payday. My ZSP stock will just sit in the sideline for now. Yeah, and I do love XEG quite a bit. So I'm holding XEG in the 0 to 100K challenge. So once oil rebounds, XEG I think is going to be absolutely crazy. So I'm looking forward to that. And that's, XEG, guys, there's no covered calls. It's going to be, it's a straight up ETF. But, that iShares ETF will absolutely ride everything. Like, there will be no potential loss. Like oil, like things like, for example, QQCL. If things explode in oil later in the year, if they explode, you're going to lose some of that upside potential, but you're not going to lose it with XEG. Now, I don't think on January 20th, oil is going to explode. Like, I think it's going to be a little bit of a lag. I'm actually thinking oil could be a little sluggish into the spring, but I do think the second half of the year will be pretty strong. But you never know. That's the thing with Trump. He's a bit of a wild card right now. And some people will argue, we've had him before. We know what's going to happen, but we don't. We really don't. Before he had a lot more checks and bounds than he has now. So it's going to be interesting. That's all I can say. Let's see. Trump is like on steroids this time around. Maybe. CNN was saying that Trump intends to invoke the International Economic Emergency Powers Act to justify the tariffs. He will say the economy is in an emergency situation. Okay. Yeah, I figure he's and nobody's willing to stand up to him, even if he is doing something, or bending or breaking rules. I think he'll get away with a lot. Let's see. Every minute will be, what's he saying now again? Yeah, it's kind of like a press conference. If you ever listen to a Donald Trump press conference, it's like you never know what's going to come out of his mouth next. And yeah, it'll be a very interesting day. Let's see. Tim says, I'm a Trump fan, but it's important to keep in mind he says a lot of things. Very few of them seem to happen. So I'm not very stressed about the tariffs or Canada's economy over the next 4 years. Yeah. No, absolutely. This is a good point. I mean, Trump says whatever's on his mind. That doesn't always mean that he is going to follow through on every single thing. Sometimes he may talk about it for a while. But you also have to keep in mind too, and this is the other key to Trump, is remember that he's not really a politician. He's a businessman. So a lot of times you have to sort of not look at something from a political strategy, but look at it from a business strategy. And Trump is very famous for asking for more than he actually wants, because then he gets the other person to settle on what he originally wants. That's one of the ways he gets his way. So he will usually ask for something big that you don't absolutely want to give up. And in the process of negotiations, he comes back with what he actually wanted. And you're like more than happy to take that, to take whatever it was he wanted you to do initially, because he threw something big at you and you were just doing anything you could to get out of the big thing. So that is a tactic that he does use for sure. Let's see, Fortis versus Canadian Utilities. So this is a king battle, guys, a king battle. And I'll tell you why. These are Canada's only two dividend kings. So Canadian Utilities and Fortis. Dividend king, by the way, it means that they have increased their dividends for 50 consecutive years or more. Now, Fortis just joined that club, not the December that passed, but the previous December. And Canadian Utilities has been there a little bit longer. So Canadian Utilities, I think they're up around, oh gosh, it's either 54 or 55 years, and Fortis is now at 51. But yeah, they're both great stocks. Now, Fortis was my first ever stock. Let's pull up Fortis. I do love Fortis. And you see, this is where there's a tiny bit of bias in here. Now, when we look at Fortis, we're just going to look at the last year. You can see here, so in June, when we started getting rate cuts, Fortis absolutely exploded. That's because utility companies do carry a good amount of debt. So they carry a good amount of debt, and that debt, of course, as you cut interest rates, you got less servicing of that debt. It gets easier for them. Also gets easier for them to expand more, because a lot of these companies are looking into renewables. They're purchasing things like wind farms. They're doing a lot of things in that area to get ready for the future, because it is the future, no matter what we think. I know right now we're all very pro oil, but eventually renewables will become more and more. So that's the thing about Fortis. Now, Fortis, I think they're a fantastic company. I love them. Now, CU, you're going to see that this is going to be very, very similar with CU. All right, here we go. Canadian Utilities. And we'll pull up that 6 month and you'll see. Here we go. Sorry, I'm going to pull up the 1 year. So we're looking at the same thing. And you'll see they did the exact same thing. So when it comes to the two of them, in a way, I think they're both good companies. I think they will both do well. Now, maybe in this case here, their dividend is 5.26%. Fortis is a little bit lower than that, 4.175. So, if you're basing it on dividends, definitely Canadian Utilities of the two. I just like Fortis myself. Like I said, it was my first stock. It's also the company itself also comes out of Newfoundland, so St. John's, Newfoundland. So being a maritimer, it makes me sort of feel like, oh, it's kind of almost an at-home company. Although technically though, Newfoundland is not a maritime province. They're an Atlantic province, but not a maritime province. But still, they're part of the crew back east for sure. Do you still like ENCC? I do like ENCC. So when it comes to covered calls, so ENCC. Also ENCL, that's the leveraged version of it. I think they're fantastic. I mean, now, if I'm in a situation where I think oil's going to explode, I'm probably going to pass on it. I'll probably fall back to XEG because then I will get all of that upside potential. So, for example, if we get a lot of turmoil going on. So, for example, like in the 0 to 100K challenge, I moved all of my oil money into XEG because of some of the stuff that had been going on in the Middle East. So now I'm at a point that, if oil's not in a crazy growth phase, something like ENCC makes a lot of sense, or ENCL if you want to have that leverage, because you're not going to lose all that upside potential on the covered calls. And that will make a big difference for sure. All right. Kingsley, you might have covered this in the past, but wondering if you are a full-time trader investor. Also, what platform do you use as a broker? I'm always curious what fellow Canadians use. I use National Bank Direct Brokerage. So yes, I do trading. So that's, because YouTube doesn't pay me a lot right now. I basically run the YouTube channel full-time, but at a loss. But on the side, I do the trading to make bills, to make ends meet per se. So depending on how that goes, some months are harder, some months are good. But yeah, I do my trading on National Bank Direct Brokerage. Couple of reasons. One, commission free. Number two is that I find that there's a good agility trading with National Bank. Although lately, in the last couple of weeks, it's been sluggish in the morning, and that's terrible. Like you go to make a trade, and you just, the interface all of a sudden just doesn't let you get in there in time. It's like, no, but normally it's pretty darn good. So I do like that. Now for investing, I think Wealthsimple is fantastic. So both of them are commission free, and that's always a big thing. There are other trading platforms as well. Like I tried Desjardins. Desjardins had so many features that I loved, but it didn't have the agility. I couldn't just go click, 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 buy. I would have to do click, 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 buy. I mean, quite literally twice as long. So that's one of the reasons that I didn't stick with Desjardins. Let's see. Northern Gal says Trump still has to have congressional approval for most of this. He's doing a lot to go towards deals with China, art of the deal. Yeah, I mean, exactly. But keep in mind, with a Republican controlled Congress, that will make it easier. That will make it a lot easier for him. Now, if he goes very drastic in the next 2 years, when the next election comes up, he may not have a Republican controlled Congress. So in a sense, a lot of the big stuff that he wants to get through, he's got 2 years to do it, just in case he's looking at a Democrat controlled Congress in the second half. Missy says, they are saying if Canada shuts off energy, they will impeach him. Canada's not. I don't think Canada will shut off the energy. It's just going to be, the only part. Well, Doug Ford said he would, but Alberta's not going to shut it off, and that's where most of the energy is coming from. So that I doubt that's going to happen. All right. Tim says, anyone have any favorite movies about stocks investing? My three favorites are Margin Call, The Big Short, and Arbitrage. Yeah. There was one I watched as well. Like, I'm trying to think what it was. There was that one with Leonardo DiCaprio in it. Was that Wall Street or something? I don't know. Or not or Wolf of Wall Street. I think I liked that one. I actually thought that one was pretty good too. Let's see. Tim says Anchor Tours. I have ENCL, which is the leveraged version. Yeah, and Tim likes it. Yeah, I know. I know Nine as well. Nine was here earlier. Nine is a big fan of ENCL and ENCC, I believe, if I remember correctly. Let's see. I got small Fortis position in my TFSA portfolio. It's been paying me some nice dividends every month. Yeah. Well, not every month. Fortis is a quarterly, but every quarter it's been paying you nicely. All right. Jay says, I'm hoping Harvest would make a Lockheed Martin ETF. So far, SHLD is the closest alternative. Yeah. Well, you never know. What do you think about bonds? Like 20-year bonds are over 5%. So TLT is probably good to add around these entry prices. It's kind of funny. One of these things with bonds, because as you know, bonds have an inverse relationship to interest rates. So bonds are kind of one of these things that people used to hold them a lot. Like bonds used to be a regular component to a lot of people's portfolios. Not so much anymore. I find bonds have kind of filtered back a little bit. Now, if I'm going to get involved in bonds, personally, I'm going to use an ETF. There's no way around it. Especially if you get a ETF that has exposure to some short-term bonds in addition to the long-term bonds, because your short-term bonds, those have a lot more. They're much more resilient when it comes to interest rates. So they're pretty. I don't want to say they're immune, but they're close to being immune to interest rate hikes and cuts. So that's one of the things I would look at. Now, I do know some people do still like to use bond ETFs or bonds directly as well, as kind of a hedge. And there's nothing, I don't think there's anything wrong with that. But for me, most of my bonds that I'm thinking about are ETFs. And speaking of that, I really do need to do another bond video. Well, when I said bond video, for some reason I was thinking of James Bond, but that's fine. Yeah, I do need to do another one. I did one, I think the last time I touched bonds in a video was maybe a couple of years ago. So look forward to one definitely before the end of this year, because I want to start making a few, well, not just bonds, but I want to make some other defensive videos as well. Talk a little bit more about defensive investing, because if we are going to head towards a recession at the end of the year, and guys, this is an if. I don't have any inside information saying there's a recession at the end of the year. Get ready. No, we don't know that. I mean, I could be 100% wrong. I have a feeling that maybe towards the beginning of 2026 that we might have a recession, but you know what? Let's see what Polyev can do. Let's see what he can do. That's what I say. Kingsley says, cool. Thanks for the detailed response. This channel will definitely trend up and up, so you won't be operating at a loss soon. Yeah, I mean, we've got steady growth. We've never had any massive explosive growth, but we've got steady growth. So, it will keep on growing. And I'm fine with that. One of the things that is nice about this channel is because we've grown slow, I think it's given me a better opportunity to really interact with most of the community. I'm still at that point right now that I try to respond to absolutely every single reply. Eventually I will get to a point where, I may not be able to, but right now I can. And that's what's wonderful right now. Like even right here with the live stream, I can go through all the comments. But now once let's say if we double the amount of people that are in here normally, it'll get a little bit harder. So even now, some days on really busy days, I may have to, like for example, if Ravi decides to make a comment to Kingsley, I may not, I may just skip that one unless it's a really cool comment. I still read it, but I may skip it if it's a comment to somebody else. But yeah, but of course, as we get bigger, guys, that's where those super chats will come in. So with the super chats, those will get read, answered no matter what, they got a high priority. Also, if you're a channel member, channel members have a free super chat they can use every day. It's not really a super chat, it's like a channel member thing, but it highlights just like a super chat. So yeah, channel members, you guys can use that. You get a free one every month, so feel free to use it, especially once things start getting too busy for me to read everything. But right now we're still good. Anchor Tor says, would it make sense to hold equal amount of shares of ENCC and ENCL to hedge the market? Not necessarily. And I'll sort of explain why. I see them as being strategic, right? So if you have a market that's mostly heading down, so let's say in a bear market, I'm probably not going to hold ENCL. Why? Because it will go down faster. It'll go down faster than ENCC will. Yes, you are getting a bigger dividend, but if you're at a point that market's going down and the leverage is taking you down further, you might want to do the math and see what your total returns are over those time frames, because the leverage might be enough to make your dividend, it'll lead into your dividend to the point that ENCC is probably going to be your better deal. So I would look at it that way. Now, if you've got a flat market or a market going up, ENCL definitely fantastic. But here we go. If we have a strong bull market and things are rising fast, then both of them are not the best option. In that case, you might want to sort of slip out and just get into something like an XEG or just any kind of ETF that does the oil industry. So that way there you're not losing all the upside potential. However, and let's just step back again. If you're like, well, okay, I don't want to go through all of that. I just want to have one of these. If you get a strong bull market going up and you're losing some of your upside potential, then you're still better off with ENCL over ENCC, because that leverage will help you gain a little bit extra on the way up. So that always works really well. Like I just did a video recently with banks. So I did I did holding the banks separately compared to a regular ETF, compared to a covered call ETF, compared to a covered call with leverage. And you can actually sort of see those trends in that video. So that might be something to check out if you haven't seen it. King of Day says, I think bonds suck, period. There we go. You don't need bonds anymore. They're still an investment vehicle, but there's a lot of different investment vehicles that I think you can get a lot of the same protection and hedging without actually going to bonds. If that's your choice. Let's see. Is XDU the same as SCHD? I don't know. That is my answer. But let's take a quick gander here. All right, XDU. So iShares Core, US Dividend Qual. Yeah. You see, I think they're probably similar. Are they the same? The only way you could really do that, Missy, is if you actually, and you could do this quite easy. If you go to the webpage for XDU and SCHD and sort of look at what they're actually holding and what their breakdown is, it can give you a general idea. But are they similar? They're similar. Are they the same? Probably not, but they might be similar. So if you're looking for a Canadian option to not go into the US stock, XDU is not a bad choice. Banana bread. I don't have any bonds. I have CBIL. Interesting. JJ says, I demand more powers as the community mod and channel member. JJ, you have all the powers. What more can you want? Maybe if you could, yeah, all right. JJ, you can now officially snap your fingers and other people's names will turn different colors. There you go. New power. Figure out how to make it work. I don't know yet. Let's see. Prairie says, Missy, do you hold C-bill in place of cash or PSA? And Sue says, I have about 2,000 shares of ENCL, steady monthly payer. Now you're making me wonder if I'll do the math. Yeah. Well, here's the thing too, and it also depends, guys. It depends on your portfolio too. So if you have a retirement portfolio that is a income focused portfolio, you're not going to be dropping, like you're not going to say, okay, I'm going to get rid of ENCL. I'm going to get rid of, you're not going to care as much. So in that portfolio, even though it might shrink a little bit, as that leverage sort of kicks in, you're still going to get that same amount of income coming out. Now, provided we don't have a really bad market and they start to cut dividends, but that's another story. But yeah, in a income portfolio, you're probably not going to be swapping out of your covered calls to a regular one just because you're like, okay, I don't want to lose that upside potential, because that upside potential is growth in that stock. You're not as concerned because you may be using those dividends as tax-free income to sort of help with retirement. So that's something else just to keep in mind as well as you think about it. Lisa says, Candace, can you give examples of what you would consider a replacement for bonds? Okay. Well, first of all, I'm gonna put this here. This is a bad answer. This is a bad answer initially. Bond ETFs is a replacement for bonds. From buying individual bonds, I wouldn't do that. Bond ETFs, yes, absolutely. Other options for bonds. So a lot of times with bonds, you're looking for that hedge against things. You can get into everything from GICs, which are, they're kind of like bonds in a way, because you get the same protection, you get the same kind of, it is a, what am I going to say? You get an interest on it. It's not really a coupon per se, like with a bond. So those are some of the things. Now, another area, and some people will get into as well, is some people will get into, for example, using inverse ETFs against, now mind you, and I will be very, very clear on this. When you're using inverse ETFs, you want to be careful. I've known people that were like, okay, that's my hedge, I'm just going to put it there. I don't like to do that. I like to use inverse ETFs personally as a, especially ones with leverage. Now, if they don't have leverage, if you have an inverse ETF that has no leverage, then fine. Yeah, it's fine. It means that it goes up when whatever you're, let's say, for example, if you had a inverse ETF that had no leverage of the S&P 500, fine. Now, mind you, all of the inverse ones that I know of off the top of my head, they all have leverage, and that's why I'm a little bit more leery. So, for example, I'll give you an example right now. Right here, HOD. So this here is your Beta Pro crude oil inverse leverage daily bear. So as you guys know, oil had a pretty good end of the week last week, and oh boy, look at this. So you could have gone from $5.80, down to $5.40 something. So you would have lost a little bit on this. And when you look at this, all right, let's not go quite that. Give me 1 second here. There we go. This is probably a better one. You can sort of see that this will move in the exact opposite direction. So if you look at this, when this is going up like this, that means oil's falling. And when it's going down, oil's peaking. So you can sort of look, it basically operates in the exact opposite direction. So oil goes up, this goes down. But here's the thing. So I believe this is a 2x. So that means, so if oil goes up 10%, this should go up almost 20%. But if oil goes down 10%, this should go down about 20%. So it works 2 times what you're expecting. So for that reason, you got to be careful with this. So if you're investing, if you're using this as a hedge, for example, you got to be thinking about where oil is going to be long term. If you think oil long term is going down, like if you look at this, oil has long term been going up, because why? This is going down long term. So that tells you that oil, because it's the opposite, is going up. So you have to be a little bit careful with these. I think you can get in a little bit of trouble, but What I will do here, Lisa, is I'll get a bond video together before the summer. I'll go in and I'll break down everything for you. Different things that you can perhaps replace them with as well. See if I can get some exact tickers and things like that, just to sort of get you a better idea. All right, Ravi says, yes, I always buy bonds, ETFs like TLT, or buying 3x leverage TMF, but very small amount since it is 3x. Yeah, 3x. Oh boy. Teddy says, is it okay to have Tesla stock in my RRSP? You can hold it. I mean, Tesla stock, you can hold it anywhere for one reason. One reason, it doesn't have dividends. So a lot of times when it comes to your RRSP, the best US stocks to put in there are ones with higher dividends, right? Because you're not paying withholding tax. So by putting Tesla in your RRSP, yeah, it's going to grow in there. That's fantastic. It's fine. But with Tesla stock as well, you could put it in your TFSA. It'll grow in there just as well. You could also put Tesla stock. You could hold it outside of either account if you're full. Like if you've got lots of room in your TFSA and your RRSP, you shouldn't be holding stuff outside in in a non-registered account, unless, here's my one caveat, unless you're trading. Like if you're actually doing day trading or swing trading, anything that would get identified, of course, as business income, you'd want to do that outside of your TFSA. Now, you could do that in your RRSP, though. That's perfectly fine. The CRA doesn't care what you do in your RRSP because they're going to tax 100% of it no matter what. So, yeah, it's okay to hold it in your RRSP. It's okay to hold it anywhere. Just keep in mind, if you hold it in a non-registered account, you are going to have capital gains when you sell, or capital losses if you sell when Tesla's not having a good day. Let's see. Misty says, yes, I have CBIL instead of cash. I don't know what PSA is. It's another one of the cash ETFs. Well, here, look, I'll show you. PSA. There we go. So the Purpose High Interest Savings Fund. And we'll just go here. And you can sort of see the way these things work. They have this regular movement every month. So their normal price is around $50, and that's the price you'll get on the ex-dividend day. So from the ex-dividend day, from 50, it might go all the way up here to like $50.14 or something. Then they pay out their dividend and bang, back to that 50 again. So it's very, very reliable. So for example, in the 0 to 100K challenge, I'm using cash. And that one is CASH. So it's just like this one. But I invest each month. When I put into this, I do it on the ex-dividend day. Why? Because I get the lowest price. So when it does come time that we're in a bear market and I start pulling it out, the odds are I'm not pulling it out on the ex-dividend day. I may be pulling it out on, let's say I'm pulling it out here, $50.11. I'm getting a tiny bit of profit. It's not a lot. I know that, but it's still profit. It's still profit, and the math works. All right. Gus says bonds never offered a protection of full proof of that in 2020. I was holding VAB and it crashed even more than equity, so I sold it and went into 100% equity. Yeah, that makes sense. I don't hold. I don't hold any bonds, but there are still some people that love them. There's still people that love them, and like I said, if you are going to go into bonds, an ETF does make a lot more sense, because then if you do have you have a little bit of protection if some of the bonds do get in trouble. But all right, there we go. Yeah, there we go. Prairie answered. All right. And yeah, you're using CBIL. And let's just pull that one up here, since we've been talking about it, in case somebody's like, which one is that? So there you go. And this one here is it's a treasury bill. So it's a 0 to 3 month, but you'll see that it's basically working pretty much the same as a cash ETF. So it's doing that same thing, which is fantastic. And that's kind of the general idea that you're wanting when it comes to just parking some cash. Lisa says a video on bonds would be great because I don't have the best understanding of them. Okay, yeah, I'll do another video on bonds. Let me get that. I'll get that worked into the schedule there. Definitely before the summer, maybe even before the spring, maybe February. Gus says bonds are the worst performers and they offer no safety at all in 2020. Oh, I thought I already read that. Oh, I did. I did. Gus, you're repeating yourself. Let's see. Optic Gamer says, I need a job so bad. I've been looking all week and couldn't get anything. Oh, yikes. Oh yeah. Well, good luck finding a job. If you've got some skills, one of the things you might want to look like, it's not a substitute, but maybe you could look at the gig economy, things like Fiverr, things like that. Maybe that could help you at least get a tiny bit of cash. But I don't want to set any kind of expectations. Like, you can go in there to a place like Fiverr and you may not get anything for like months. There's no guarantee with it, but it is sometimes difficulty. Hopefully if you keep at it and get your resumes out. I don't know what it is that you do, but hopefully you can find something. I hope so. Let's see. Lisa says, wow, guest, sorry to hear that, but thanks for sharing your experience. Anchor says, would it make sense to have a substantial amount invested in non-registered account and use the dividends and capital gains to fund RRSP contributions? Well, it really depends, right? Like, if you have not, if you don't have, if you have tons of space in your, in your registered accounts, it probably doesn't make that much sense because you could sort of have it sitting in there unless, and let me give you a caveat. So if you're in a situation where, but no, I was thinking about employment matching, but that's done right at the paycheck level. So that wouldn't make that much sense there. If you had like a first home savings account though, and you wanted to hit that 8,000, maybe that would make sense in that case, just to sort of have something to move over. But even then, you could put that into a TFSA. You could still pull all those dividends out there. Now, yes. So let's say, for example, you get, let's say you had $8,000 a year in dividends. You pulled those out of your TFSA and you put them in like a first home savings or something like that. You do lose $8,000 of space because, those dividends grew it by 8,000. So you lose that 8,000 when you pull it out. But January 1st rolls around and you get that $8,000 room back. So you get that back. Plus, of course, like if it was this year, you'd get the additional 7,000. So you would have gotten 15,000 in space back this year opposed to that. So you kind of like, there's no real right way to do it. I usually say just work out your math. If doing it one way, if the math shows you that, it's a little bit more, so you're making a tiny bit more, then that makes sense. That one problem, right, is if you're parking money so that you can just take your, your dividends and things like that out of that non-registered account. If you're doing it that way in a non-registered, you have to keep in mind too, those dividends are going to get taxed, depending on what the stocks are. For example, if, it's, let's say, for example, they hold American stocks, you might have foreign income in there. That's 100% taxable. So you will get taxes. And then, of course, if you do eventually move those stocks, you're going to then have a situation of capital gains. So there's all of those things. Whereas if you're holding it in your TFSA, that none of that is happening. And like I said, you can pull those dividends out of your TFSA. There's no issues with that. You'll get that space back in January, though. You just have to remember that. So when you're keeping track of how much space you have in your TFSA, always count all the stuff that you pull out of it, especially if you have an income, if you're using it for income. Just remember, if you're pulling out $8,000 a year in income, you're getting that 8,000 back in January every year. All right, Michael says, MFA looks oversold with book value almost twice the close on Friday at 9.55. Ooh, interesting. Let's take a gander. I'm curious. You got my curiosity going here. MFA. Let's see. Here we are. MFA Finance, right down here. I found them. So MFA Financial. Now I'm just gonna pull up a couple pieces of the data here. Let's see here. All right. Now the return on equity low. I'm not seeing any debt to equity. I'm assuming maybe they have none. I would always double check. I always don't. If I don't see something here, especially if it's a US stock, sometimes I'll go to another source because the TSX, so TMX money, they're great with Canadians. Sometimes they let you down. sometimes they do let you down on the American stocks and don't give me a lot of information. But that might be one. So MFA might be one, for example, to run through like simply wall.st. That would be a great place to get more information on it. 9 says ETFs like TLT pay monthly income too. Yeah, that's always fantastic. You gotta love monthly income. Anchor says, thank you for that, Candace. I never thought about the ability to get the contribution room back over the following year. Oh yeah, that's a big thing. Because sometimes I've actually seen people, even in this community, I've run into somebody who was like, they were pulling about 8,000 a year out of their TFSA, and then they had a bunch of stuff in their non-registered because they were saying, oh, my TFSA is full. And I'm like, okay, are you sure it's full? And they're like, oh yeah, I got my 7,000 or whatever a year, and I always max that up. And I'm like, okay, what are you doing with all of the dividends? Oh, I'm just pulling that out as income. I'm like, you get all of that space back. And they're like, crap, I got more room than I thought. And that's why it's always important to keep track, because honestly, the CRA is not very good at keeping track of it. Although amazingly, the CRA is very good at keeping track of it when you go over compared to just letting you know how much space you have. So there could be a conspiracy theory there, guys. There could be. But anyway, all right, guys. If you got your last minute questions, now's the time to drop them in. We're probably not going to go another hour though, but if you got a couple questions left, throw them in. We'll get to them before we end for the day. I'm gonna have some coffee though while you guys do that. Oh, and if you haven't hit that like button yet, definitely hit the like button. I don't actually know how many likes we have. That was one of the other things. StreamYard doesn't tell me, but yeah, I have no clue. But hit the like button nonetheless. Oh God, that's fun. Oh, and if you guys, I didn't mention it here, but I did mention it on the market close the other day. So as you guys may have noticed, I did this video. I did a short the other day just showing all of these crazy donations we got that one night. Back last March, we had somebody coming in calling themselves Starbucks Coffee because I was using a Starbucks mug back then. And every time I took a drink, they were dropping a super sticker. It was fantastic. I mean, I loved it. It was great. So I just did this thing where I just showed all of them together. But the funny thing is, one of the community members asked me to make it. They said, oh, could you please do it? And I was like, yeah, sure, I'll do it. So I did. And in the process, I discovered the identity of the Starbucks account. So now that I know that person's identity, I'm thinking they're probably the Banana Bread Co. person. I think they're the same person. I'm not 100% though. I mean, technically it could be two separate people, but they've become my number one suspect. So I'm very, very close to finally knowing who runs the Banana Co. Account. But as I mentioned then, unless this person says it's okay to to reveal their identity, I'm not gonna do it. I'll just say that the clue was there the whole time, and I missed it. I was definitely late to the party, but I did figure it out. I figured it out finally after almost a year. So anyway, of course I'm super, super grateful to that person. That was a fantastic show. They turned it into probably one of the funnest live streams I've ever done. So that was very, very cool. 29 likes. Okay, well, guys, hit the likes. Northern Gal says, thanks, Candace. Learning lots from you. Glad I found your channel. Well, I'm glad you found the channel too. Yeah, absolutely. Let's see. Landro says, I looked into XDU to replace SCD in my portfolio, and SCHD has a better dividend yield and a better cager. There we go. And that's kind of that whole mix. But I figured somebody had actually looked at compared the two. So maybe Missy, that might be an option. You have to sort of figure out what you're going to do. I'm holding SCHD in the 0 to 100K challenge. Depends on your account, right? So with National Bank, they actually will give you a free US account. So you don't have to, you still pay conversion fees, but there are ways to get around it. With National Bank, you can use the Norbert Gambit to get money across. You can also do that with Quest Trade, and I believe Royal Bank allows it too. So there might be more out there. So guys, if you guys know any place that I have not mentioned that does the Norbert Gambit, always drop that into chat. I'm always kind of curious to know. I did bug Canadian in a t-shirt. I've been bugging him saying, do one for the Norbert Gambit for the National Bank so I don't have to do it. But so far, I haven't heard anything. Let's see, Candace, is there any case where borrowing money to fill contribution room in an RRSP makes sense? I don't understand how people do it. All right, if you're talking about borrowing money from a bank, I personally, unless you have a crazy low interest rate, I usually say it doesn't make sense to borrow money for investing, because most cases, your bar is now set pretty darn high when it comes to what you need to get in a return. It can work, but it doesn't always work, especially if you, like, here's the worst case scenario. You go to borrow money, and so that whether you can invest, and you're thinking, okay, yeah, I'll make a return if, let's say you get a nice rate. You get a really good rate of 10% on a line of credit. You borrow the money, you put it in investing, and you're like, yeah, I'm easily making 12, 13, 14%. Well, what happens when we go into a bear market? Are you still making 12, 13, 14%, or are you making less than the interest on that? So always be really, really careful with that. In most cases, I don't think it makes a lot of sense, but it can work. But I highly, 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 highly caution you against it, because it can bite you in the face. It can bite you in the face, and that's not something I want to promote. That's for sure. All right, guys. I guess are we leaving on a sad note because of bite you in the face? Those can't be my last words. Those can't be my last words of the night. All right. Coming up on Tuesday's video, channel members do get to see videos one day early, so they can see it on Monday, so tomorrow. We do have a video. I'm looking at some ETFs that I think have some potential to do well. So I picked one ETF per sector. So we're looking at 5 sectors. Some sectors obviously didn't make it, like the communication sector. We're not picking an ETF for them because I'm not very bullish on that sector at all. But that will be coming out on Tuesday. Now, on Thursday, I haven't decided yet what I'm doing for that video, because that was the subscriber-sponsored video. Nobody took it this month, so we don't actually have a subscriber-sponsored video. So I want to come up with something cool. So we'll see what that's going to be. I don't know yet. I have no clue. That'll be I'll be thinking about that. Well, I have to script it on Tuesday, so I have to think about that tomorrow and figure out what that is going to be. But it'll be fun. It'll be a lot of fun. Anyway, guys, this has been fantastic. Another wonderful afternoon with the crew. We'll be back here on Wednesday, guys. We will have our market close on Wednesday, so that will be a lot of fun. I can't wait until you know what? I see Fred sneaking a question in. All right. We'll answer your question, Fred, before I leave. Would you average down your position on Algonquin Power? Great question. So Algonquin, oh boy, everybody used to love Algonquin. Algonquin used to be this almost if you were a Canadian do-it-yourself investor, you probably had Algonquin back in the day. Oh boy. Well, look, here's just the 3 years. They've had a very bad 3 years. They keep getting lower and lower. Now, Algonquin they have sold some of their assets to try to help pay down their debt. They do have a fair amount of their business in the United States that is highly regulated, which is positive. So there are some positives for Algonquin. However, this is a company, every time I call the bottom, or I think they're at the bottom, I think they can't go any lower, Holy banana bread. They buy a brand new shovel and they keep going. So yeah, if you are way up here and you want to average down, it won't take much to average to start lowering your adjusted cost base down. However, here's my caution on this one. You have to look at the last 6 months. So this here, all of the utility companies from June, so basically from back here, I guess I have to go to 1 year now. Here we go. Yeah, so here we go. Right about here. This is where the rate cuts started. Now they had a little bit of a hike from the rate cuts, which is great. But then they went back to their old ways. They fell and they just keep on tumbling down. Now, if we go out to their 20-year history, you can sort of see the last time that they were this low was all the way back here in 2011. And that was right after, this big jump here, that was the housing crisis. So that was the big housing crisis. Oh, dear God, guys. I thought that's right, because I just closed it because we were going to go. All right, sorry. All right, so back here, this is Algonquin, the last 20 years. Here, they did great after the housing crisis. So here was the housing crisis right here in 2008. They, at this point, they were doing fine. You can sort of see why they were a favorite stock of everyone. That was absolutely fantastic. And then, of course, they got up here. Boy. And then, of course, well, here, let's see. The pandemic itself was right here. This is the pandemic one, which is funny. You look at this and you think, that has to be the pandemic. Nope. It was this little one over here. But then they seem to be doing okay, just holding steady. And then it's been all downhill. So basically, once they went into the bear market, once the hike started going up, they got overburdened with debt. Servicing their debt was absolutely destroying them. They ended up cutting. Well, first of all, they went from a monthly dividend to a quarterly dividend. Then they started cutting their dividends, and it has been just downhill from there. Is the bottom in, though? That's the question. I feel like it should be. Like, I feel like if you're averaging down that that they're going to slowly start going back up. But what I do think is I think that if you're going to do that, you're going to need patience, because I think it's going to take a while for them to really go up. I see probably the biggest chance, I think, is you might see a little bit of sideways motion with a slight incline to the upside. Not much. Like, I think it'll take time for you to get your money back. But at the same time, if you've got a long runway and you're waiting, the nice thing about that is dollar cost averaging down. You keep bringing your adjusted cost base down. Eventually, you could conceivably make some money with this one, but I still consider it high risk, just because every time you think they're doing something right, they still keep falling. This company always worries me a little bit. That's why, like, this is the only company I've ever used an actual dumpster fire as a thumbnail for them. The only company ever. So I would be careful, but it's not outside the realm of possibility. Perry says, back in the day, I would borrow against my LOC for the yearly RRSP contribution, as the interest would be written off. No longer the case. Yeah, if the interest is being written off. Fantastic. All right, guys, Fred was supposed to be the last one. Holy banana bread. All right. RRSP loan at RBC, interest on 1 year gives at prime 5.45%. When you get refund, pay it off immediately and you have a good run. Okay, there you go. So that's a thing. If, you can do it, It's just, I still consider it risky. I still consider it a risky move. But if you're going to do it, you want fantastic credit, because you want the lowest rate you can get. The lowest rate you can get, for sure. But keep in mind, rates do change, right? Think of all those people who picked up mortgages during the pandemic thinking that rate was going to be as low as it was for a very long time. It didn't work out that way. So you always want to make sure that, one, you can handle it now, and two, that your investing strategy is still going to be able to handle it if your rates go up. So that is something to keep in mind. All right, this time I'm really leaving. I'm really, really leaving. All right, guys, this has been a fantastic show. You guys rock. We'll be back here on Wednesday for the market close. Until then, take care. Enjoy the rest of your weekend, and let's hope we have a nice green week on the market. All right, until then, everyone.